While the retail market focused on the listing of SK Hynix options, institutional capital quietly realized something far more disruptive. Speculators did not show up to the traditional options market. Instead, a massive liquidity shift toward leveraged single-stock ETFs is completely rewriting how market participants express risk in the semiconductor space. Speculative capital is bypassing traditional derivative options entirely. This leaves newly launched derivative products struggling to find natural buyers. To understand why this shift matters, we must first look at the core moat of SK Hynix. This is no longer just a cyclical commodity memory manufacturer. SK Hynix has transformed itself into an indispensable partner for advanced artificial intelligence hardware. By mastering the complex stack architecture of high-bandwidth memory, they secured a dominant early mover advantage. This position insulates them from the standard pricing pressures of consumer-grade memory. But that is only part of the story. The physical integration of memory with computing silicon is where the competitive moat becomes impenetrable. SK Hynix has built an exclusive ecosystem with advanced packaging leaders like TSMC. Together, they package memory directly alongside NVIDIA graphics processing units. This tightly coupled structural alignment makes it extremely difficult for competitors to displace them without disrupting established supply chains. Here is where the margin metrics become interesting. Recent quarterly results demonstrate an unprecedented turnaround in structural profitability. Operating margins have swung from deep negative territory back to robust double-digit expansion. This is driven entirely by the premium pricing of HBM3E products. Unlike standard DRAM, advanced memory products command long-term supply agreements. These contracts protect SK Hynix from short-term spot market volatility. The balance sheet details reveal an aggressive but calculated capital allocation strategy. Free cash flow is recovering rapidly. This recovery allows the company to aggressively fund next-generation fabrication facilities. Meanwhile, they are keeping legacy capacity tightly constrained. This disciplined capital expenditure approach keeps industry supply balanced. It also prevents the classic oversupply issues that plagued previous memory cycles. The next signal comes from management's corporate guidance. Leadership is explicitly shifting focus away from volume growth. Instead, they are prioritizing mix-adjusted margin optimization. By fast-tracking the development of 12-layer HBM3E and HBM4, SK Hynix aims to maintain technological leadership. This proactive strategy keeps them ahead of rivals trying to validate their own competing chips. Management has also highlighted the customized nature of upcoming memory architectures. HBM4 will require integration of custom foundry logic on the base die. This requires unprecedented co-design between SK Hynix, foundries, and end hyperscaler customers. This level of technical collaboration locks in customers years before mass production. It creates a powerful switching cost that protects forward earnings visibility. Now look at how the broader sector is reacting to structural liquidity shifts. The lack of speculative call buying in newly listed SK Hynix options points to a bigger trend. Leveraged single-stock ETFs, such as those tracking NVIDIA, are sucking the oxygen out of the room. Speculators prefer the ease of buying highly leveraged equity shares over trading complex option structures. This creates a highly concentrated pool of liquidity that amplifies market volatility. In the wider industry context, the competitive landscape is shifting. Samsung is aggressively spending capital to secure validation for its own advanced HBM3E chips. While Samsung has struggled with qualification timelines, they remain a formidable long-term threat. Meanwhile, US-based Micron is also ramping production. This threatens to turn what is currently a lucrative duopoly into a more contested three-way battle for market share. That leads us to a bigger question regarding terminal risk. The concentration of demand is a major structural vulnerability. If NVIDIA experiences any slowdown in demand, the impact on SK Hynix would be immediate and severe. Because HBM cannot be easily repurposed for consumer devices, any sudden shift in hyperscaler capital expenditures would quickly create a major inventory overhang. We also cannot ignore the rising geopolitical headwinds. Export controls on advanced computing systems are tightening. This creates friction in key markets like China, which has historically been a major destination for memory silicon. If trade restrictions widen to cover premium memory architectures, SK hynix would face significant revenue headwinds. This would force them to rapidly reallocate supply to Western markets. When assessing the outlook, the street seems to be pricing in a traditional cyclical peak. However, this may be fundamentally mispricing the structural shift in high-end memory. If AI demand remains strong, SK hynix could sustain elevated margins for much longer than expected. This makes current valuation multiples look surprisingly conservative compared to historical peaks. Looking further out, the transition to custom silicon will likely redefine the industry. SK hynix is well positioned to lead this transition. By integrating memory and logic chips, they are moving from a standard hardware provider to a custom platform design partner. This evolution secures their long-term position, even if commodity chip pricing experiences a downturn. This brings us to our tactical review. SK hynix remains on a breakout watch. This is driven by its strong technological leadership and robust balance sheet. However, investors must monitor competitive validation milestones from Samsung. Any sign of Samsung winning HBM business from NVIDIA could trigger a significant tactical capital rotation across the chip sector. The landscape is changing fast, and understanding these structural liquidity shifts is key to navigating the market. For deep institutional research and real-time updates on global technology supply chains, subscribe to SR Money News. Turn on notifications so you never miss our deep dive analysis. Let us know your thoughts on this semiconductor shift in the comments below.